What is up? We are back with another review. This week's been a little bit wonky with Powell speaking. We have CPI tomorrow. So even if I wasn't doing one trade today, I would probably be done for the day anyways. But we took one trade and one win. We'll go over that. On paper, as you can see here, this is the paper account, the practice account. I took one trade. I'll go over that. Made $420. And then on the eval account, I had one trade for $360, and we'll get into that as well. So yeah, we stuck to our rules, and we took one trade. Log out of Tradovate. Yeah, so we took one trade and we're done. Again, like I said, I'd probably be done for the day anyways after that one trade. Because I'm not the biggest fan of where we're at in the market and how it's moving. I'll probably sit here and price read for a little bit because I have nothing to do anyways. But yeah, one thing I want to say is that we are at all-time highs. We're we're at all-time highs. We're in the summer months. I've been seeing a lot of comments talking about that, and I do remember last year, it was very early on to when I was trading, but I do remember the summer being a lot worse with just the movement overall. Like, the efficiency is just kind of weird. Like, this move up was just, like, weird, no real displacement, and then we just kind of chopped and sit in a sideways range. We're at summertime months, and we're also just chopping in this range here. Like, we're not really moving much. 83 points for the whole day from the high to the low is just not very much on the NQ. We're in like a 90-point range. It's just not very ideal. But so going into the day, I was waiting for Jerome Powell to start speaking. Nothing really crazy happened there. But yeah, I was just watching the market, and I'll just go over kind of what I read, what I saw in the market, and kind of how I interpreted things. And yeah, we'll go from there. So this was market open around here. We ended up just selling off. You can see I marked out this order block. I've been getting a lot better, or I wouldn't even say better, but I've been getting a lot more attentive to order blocks. And let's see, I think it was on the 1 hour or 30 minute. Maybe 1 hour. Yeah, it was the 1 hour. So as you can see this black candle right here. I marked out this black candle as an order block because we had a fair value gap. But notice how we respect the fair value gap here. So this 1 hour fair value gap here that we respect, notice how we respect it, but we also reach down and tap this order block. So the red line is the fair value gap. Notice how when we come down, this is the fair value gap right here, the space in between. We reach down, we hold this 1 hour order block, and when you go on the lower time frame, the whole idea behind order blocks is just that a bunch of sell orders or orders in the opposite direction were placed. So we had a lot of sells here. So the market comes down, can fill more sell positions because people were clearly trying to sell here. And then we respect the order block and bounce and hold the 1 hour. So that hold there kind of told us we were going to be bullish. We end up sweeping the actual high again. So that's kind of what I was looking at there. Again, no trades. This is just price reading. This is just how I'm looking at the market, how I'm gaining information. We put in this fair value gap here. We end up holding and taking the high. We come down. We sweep these lows again. We hold the fair value gap. We go higher. Nothing too crazy. The first area we reject is here. We inverse this fair value gap right here, and we start selling off. But I wasn't really looking for anything there. We then put in this high here, which was a 3 minute fair value gap and a 5 minute that barely got ticked with this area here. So I was waiting to get a trade to this sell side liquidity because when we displaced through the low, we held this fair value gap, we came down and swept these lows out. I was anticipating that if we could hold bearish structure, our draw in liquidity would be this low, which ends up being the draw. But we put in these three highs here, which is now the draw in liquidity, I believe. But we put in these three highs, and we sell off. We come up, we hold this fair value gap, and we sell off again. So the paper trade I took was on this 5 minute here. You can see this 5 minute gap. I waited for the 5 minute fair value gap to break, which broke right here, and then we sold off. I'll pull up the executions. I took my profit on this low here, just because it purely gave a better risk to reward, and I was expecting the market to come down there and probably dig deeper than just this internal low. So I got in on this candle's break, and it was a nice quick trade. I took that one on paper first before taking a trade because I am doing one trade a day. And also, it's not my favorite ever setup because we're put in equal highs. We have a lot of low resistance liquidity we're building, and you just never know if you're going to come back, take this, and then go lower. So I took it on paper. I was like, cool, I'm going to take it on paper, build conviction, just test my eye, and we hit the draw on liquidity. So after that, I'm now either waiting for London low, which is this blue line, and London low never got taken. I was like, okay, let me drop down to the 2 minute. The 2 minute had one fair value gap. We had swept the low here, and we're at all-time highs. We have the low resistance liquidity that we haven't swept any of these highs. And I was like, okay, if this 2 minute breaks, I'll take this trade. So I jump in. I jumped in a little bit late, which I haven't been normally doing, and it wasn't anything too crazy today, but I did jump in a little late. I wish I filled myself at the entry of this candle. Would have gave me more, a better risk to reward, and it would have been more of a 40-point target. But regardless, we got into the trade here, and my stop loss was originally just somewhere down here, and then it closed below this on the 2 minute. I would have got out. I'm very happy with how I held. As you can see, we had red candles come in, and we were constantly kind of staying under my entry. So here on this candle, it really looked bad, like it was going to come down and close out. But I'm really happy with this trade. I made some mistakes, and I'll go over them, but I'm happy with how I held. Again, my stop loss was around here, and then when it hit the break even, I just trailed it up. But this 5 minute was actually what was holding price for a little bit. As you can see, this blue box here is a 5 minute bearish fair value gap, and you can see we came in, wicked it, rejected, came in again, couldn't close above, wicked again, and then when this closed here, I was very, very, very confident. I moved my stop under these lows, and then eventually it went to break even. But again, I'll pull up the execution in a minute, but I'll go over kind of my thought process. I was holding through here. I liked the trade, but we're moving slow. And ES at the time, I'll actually pull up ES. ES at the time was a lot more bullish. We had already been taking out these highs. ES at 1125. 1125. See, we were right here, and ES was already taking out these highs. So I was a little bit skeptical, and my mind started, playing tricks on me. But we started getting the move up. We closed above the 5 minute, this blue box, and I really knew it was good to go. We go above here, so I moved my stop to break even. And in this blue box here is a 1 minute fair value gap. I ended up just taking my trade off around here, and the mistake I made there was I was definitely trading the P&L. Because I saw it hit 400 or like 380, and since I was just trading one contract, I was like, oh my gosh, I was just looking at the 400, and I wasn't thinking about trading properly in that moment, and I was just scared that with the SMT, because at the time we had an SMT like this, I was like, okay, this thing could just fall. It's not looking crazy bullish, and I was like, let me just secure the profits. But as you can see, this low resistance liquidity is playing out very, very well. But yeah, so I was just a little bit just scared, and I was trading the P&L, which is just mistakes I make. But this is why I'm really happy to do one trade a day, because even though I probably wouldn't be taking another trade today anyways, the one trade a day allows me to, if I make a mistake, I don't just jump back in. Again, in this specific example, I probably don't have anywhere to just jump back in. I probably don't do anything dumb, but it removes that ability to be like, okay, I'm going to do something bad, right? When it was about to stop me out, I just held and held because I'm like, this is the only trade. At one point, I was risking a little bit more. I was like down here, I was risking like 19 points. But then when we were moving around through here, I was like, okay, I'm going to risk 14 points. and 14 points was it. I could lose $300 around or close to 300 on the trade, and I was like, okay, I'm cool with that. This is my only trade. So one trade allowed me to just be like, okay, I'm cool with whatever result happens. Yeah, it's going to be frustrating if it loses, but I'm not going to just get out early because I'm afraid to lose. I'm just going to let it happen and see what happens, because this is it. This is the only trade. I pushed the button. I made the decision. I put on risk, and now I'm going to follow my plan and let things play out. Again, my mistake was just cutting it here because I was just trading P&L. I let my emotions take over, and I just didn't let it run to full take profit, which would have been $700. So I missed out on about half profits because I was scared. But there's a lot of positives from this, right? I'm not going to be perfect. That's why I'm doing one trade a day. That's why I'm doing one take profit, or trying to hold my trades, is because if I can just execute one trade per day and just get better, every time I do that trade, I get better and don't have to worry about the next trade or the next trade that day and just the next setup or whatever. I can just trade one trade and just really put my energy into that one trade. And I'll make mistakes, right? Mistakes I can't make are taking another trade because my plan is one trade a day. So that's a mistake I can't make. I can't allow myself to take more than one trade because my rule is one trade. Another mistake I just can't make is trading too big of size. That kind of happens more when I take another trade and maybe I took one contract and now I want to take two to make a loss back. But regardless, a lot of the mistakes I would make happen with taking more than one trade anyways, because if I take one trade and it's a good setup and I don't take anything else the rest of the day, I can't really make a lot of the mistakes I make, right? So if it's a good setup and I'm only taking one trade, I can't really make a lot of mistakes that I do make, which is, again, the whole reason I'm doing one trade a day is to limit the mistakes, because that's what's holding me back is just the unnecessary losses, the unnecessary mistakes. I went through and back tested all of the trades I've taken. The first trade, like I went through all my videos, and the first trade I called that I took every single day, if I just took that trade and held properly and went and stopped for the day and came back the next day, I would have been up 6K over 8 trading days. Again, I went on an 8-day winning streak, but that just shows that if I just took one trade a day and executed properly, I would be way more successful than what I've been doing. So again, one trade per day is allowing me to make a lot less mistakes, because what does it stop me from? Over trading, which is a big mistake. Stops me from over leveraging to make back a loss. Stops me from re-entering in bad spots. Stops me from taking bad trades. So objectively, one trade a day, I almost can't fail as long as I do one trade. So as long as that's the only rule I don't break, I'm getting better, right? So even though I broke a rule, which is frustrating, I'm annoyed with it, and it's kind of frustrating to do. But even though I made that mistake, right, it's not the mistake that I can't make, which is jumping back into a trade. I just can't take more than one trade, and that's not going to always be the case. Eventually, I'll be able to take more than one trade, but right now, I have to focus on just taking one trade and allowing the process to take over, and just focusing on being disciplined and just proper rules, proper risk management. And one trade, I keep talking about one trade, but one trade, I genuinely believe one trade per day is going to save my trading, and I'm just going to have a lot better results. It might not be as quick as I would hope. It might not be overnight success. It might not be, I might not have $1 million in funding tomorrow, but I do believe I will pass my first funded if I just stick to one trade per day, one take profit, and just let things go and just work on that. I even felt a lot better in this trade that I took. I felt like I held it better, even though I got out of the trade early. But like I said, I'm going to make mistakes. So I'm trying to give myself, I'm trying to be hard on myself in terms of I can't let those just slide. I can't just let mistakes slide. But, I'm not going to sit here and beat myself up, right? I found a good trade. What did I do? I waited for a good setup. Maybe today wasn't the most probable day, but we had low resistance liquidity. We had one fair value gap. We swept it low. ES was bullish. I liked the trade. It was a good trade, and I followed my rule of one trade per day. I held when it was down. I didn't just panic and get out. There was things that scared me when I was in the trade with the SMT that made me think maybe it would reverse. So there was a lot of positives, right? So even though I did make a mistake with the execution, I can take a lot of the positives and just be okay with the fact that, okay, we took the one trade, right? That's 2 days in a row we stuck to our plan of one trade. Yesterday it was a 9-second trade, so I didn't have to even worry about the take profit, it not like holding, but 2 days in a row, right? And if I show up tomorrow and my trade loses, that's the real progress, is taking a loss and sticking to one trade, and then showing up again, taking a loss and sticking to the one trade, and then winning, right? Because what we did today was getting out of the trade early, which we got out about like here, getting out of this trade early for 18 points instead of 34. That is an entire stop loss on my next trade, right? If we hold for 34 points and my stop loss was 14 points, right? Think about how much better off I'd be if I took 2 winners like this, back-to-back winners. So then we can just make this 68 points, right? And then, bear with me, this is going to make sense in a second. Let's just say 68 points. So this is our wins. And then, let's say then we go on then we take a loss, right? We take a 20-point loss. Boom. So we took 2 winners and 1 loss. And then let's say we take another loss, right? Or we'll just leave it here. We took 1 loss, right? This 20, okay, cool. We lost 20 points. 68, so 58, 48. 2 winners is still going to be a lot bigger than the loss. And this is where we'll be left. We'll still be up 48 points. That's really simple. I don't know why I demonstrated like that. But the point being is when I cut my trades early, right, I'm never guaranteed to take a winner. I'm never guaranteed. Every time you enter the market, it could win or lose, regardless of how good your setup is, regardless of how many confluences, or regardless of how confident you are, right? I could have even held to this target, which is my main target, or shoot, even more bold and hold for here, right? I'm not saying that that's good or bad or that's how I should have done it. I would have been perfectly fine taking it off at these equal highs, so I'm not going to just sit here and say that like I would hold to this, but I could have. But again, regardless, it doesn't matter. This is one of the things that I really try and drill into my head, and I feel like a lot of people overlook, is that it does not matter about how it doesn't matter how good your strategy is. It doesn't matter how confident you are, how profitable you are. Every single time you enter a trade, it can lose, regardless of your win streak. I don't care about your win streak. I don't care about you losing streak. I don't care about, that you have an 80% win rate. I don't care that your setup has a 90% win rate, whatever it is. I don't care what your data tells you. Every single time you can enter the market, you can lose. And that's part of the game. That's the hard part, is because I hate losing. Most people hate losing. You probably don't like losing. But the reality is you can lose every single time you step in and place a trade. So with that information that you can lose every single time you place a trade, what do you do with that information, right? You have to look at it and, okay, now you understand you can lose, and you come into the market and boom, okay, I can lose any time I place a trade, no matter how good. Okay, I have an 80% win rate, but this could be the 20%, right? You have a 90% win rate, 50% win rate, whatever the case may be. You can lose every time you enter a trade. So now that you know that, you get into a trade, it could, you follow your edge for a reason, but the only reason strategies work is because you have something you can repeat and you can have confidence in. The market only goes up or down. The market doesn't bounce off fair value gaps, no matter how much you think they do. The market doesn't, respond to EMAs or trend lines or liquidity sweeps, right? The market doesn't have to do these things just because you think they do, right? It's that, I don't know what the word's called, but it's kind of like when you think something or you believe something, you see it happen and it just reinforces it, but it's not what's causing the market to move, right? I trade inverse fair value gaps. I trade fair value gaps. I trade liquidity, right? none of this stuff is the golden ticket. None of it's real. It's just, and again, okay, I don't want anyone that's newer to hear, oh, fair value gaps aren't real, right? It's not that they don't work. It's that it doesn't matter, right? You can sit here and do any strategy and make money. The only reason you need a strategy and need to follow one strategy is because all trading is having a plan and executing, right? My plan when I got into this trade, or my plan when I get into most trades, right, is I look for an inverse fair value gap after a liquidity sweep or something, but I target equal highs, I target the high, I target imbalances, and I look for at least a 1-to-1 risk to reward. I look for a 1-to-1. So that's my strategy. That's my system. That's what I repeat. It doesn't matter. The market doesn't care that the 5-minute fair value gap inverse. The market does not care. The market does care about going up and down. So when you enter a trade, the only reason your strategy matters and the only reason to build conviction in a strategy, yes, some strategies have a high win rate. I think inverse fair value gaps work great. I don't think inverse fair value gaps the reason the market went up. I think that the market was going up and I used a signature and price to enter, but I use the same signature. I use inverses, so it allows me to have confidence because I've seen it happen. Now that I've seen it happen, I can have confidence that the trade's going to work, or I can have confidence that it could work, or I have confidence that it could go here or there. But again, the market doesn't have to go anywhere. You can lose on any trade no matter how good you are. So when you see the market moving, right, and you execute your trade, understand that you can lose. Understand that this might be the trade you lose. But what you also have to understand is that the only way you succeed is if you hold your trades to your target. I'm not saying you have to hold to the maximum and be able to figure out the top or bottom, but whatever your strategy is, my target was these equal highs, 34 points. The market's up a lot more than 34 points. The market's up another 29 points. Yeah, that would have been great. But my target was 34. I could have lost on this trade. I could have. The reality is, where I entered, if I put my stop loss down here from my entry and I targeted here, the reality is this: I would have won the trade. But live time, I could have lost. So I don't need to plan for losing. I don't need to plan for, you have a stop loss, you have an exit requirement if it closes back below, or if it, whatever your stop loss is, wherever you place your stop loss, however you want to place stop losses, you have them there. And then after that, all that is there for is, I could lose. I have an 80% win rate, but I could lose. So, I'm not just going to lose indefinitely. I'm not going to blow my account up. This is my stop loss. But as soon as that happens, okay, this is my stop loss, this is how I get out, I might lose. Boom, okay, I might lose. Now just let it go. And that's why I try and tell myself, because again, it does not matter what you trade. It does not matter your concepts or whatever. This trade in hindsight played out perfectly. Let's say I targeted this high. That's like a 3 risk to reward if I did that, like almost a 4 risk to reward. Again, looking back, if I took that trade and I held all the way through, we know, because it played out, we know that I would have made 69 points. So we know that I would have made 69 points on this trade because it happened, right? But right here, you don't know if you're going to make 69 points. You don't know. You could lose. You could win. All I'm trying to get at here is emphasis, the fact that it really doesn't matter what you're doing, how you're doing it, if you can't just let the market do its randomness. Because I have a strategy. I have a strategy that I think works, that I have confidence in. Just because I look at an inverse, someone's looking at a bounce off a VWAP, someone's looking at, break of structure, someone's looking at a fair value gap tap, someone's looking at tick divergence, someone's looking at whatever you're looking at. We're all trading the same market. Everyone's concepts work in different ways, right? Someone just, short of the top here or something. Like, it doesn't matter. The market's moving up or down, 50-50, up or down. It either goes up or down. There's only two directions. There's only two outcomes, win or loss. The market is completely random, and I gotta get that into my own head. Really, I'm talking to myself, but anyone that's listening, understand that it's all random, right? Yes, it doesn't feel random when it sweeps a low and reverses, but how about the times it sweeps low and just dumps, keeps dumping, right? That's the time you lose. That's why you find something that gives you an edge. It's just like a casino. There's people that are profitable at gambling, and there's people that lose all their money gambling. There's a reason why. I'm obviously a day trader. I like to trade. When people say day trading is gambling, it's kind of annoying, but day trading is gambling. Day trading is gambling. Day trading is gambling in the same way that playing blackjack or playing poker is gambling, right? When you play poker, you are not guaranteed to win, but you can make mathematical decisions that can give you an edge, and you can win over the course of a longer period, just like trading, right? It's gambling. I'm sorry to break anyone that doesn't like to say trading's gambling. Trading is gambling. But guess what? It's not a rigged game. It's not slots. You're not sitting there pushing slots, losing all your money. You have control. You have the ability to risk management, and that's all trading is. I forgot. I need to find the guy's video that I watched. I don't trade his concepts or anything. I just stumbled across on YouTube a brilliant video. He literally just buys and sells whenever he feels like it with good risk management, and just if it goes against him, he just buys more. Or if he goes against him more, he'll buy more. But he trades with such a low lot size or lower contract size that when it keeps going against him, he just averages in because he knows eventually the market's going to bounce. And then when it bounces, he gets out, takes his profit. But the reason why that can work for him is because he has so much data and so much experience doing it, so much discretion that he can use, so that he knows how to maximize profits, how to maximize or minimize losses, how to hedge, all this stuff, right? My point being is he is randomly, in a sense, randomly trading. Like, he would just buy short here. I'll give an example. He would buy short when the market came here. And then if it moved all the way down here, he'd take profit. If it hit the low, he'd take profit. Boom, on a small size. If the trade did this and went against him, he's not stopping out. And again, I'm not saying the trade like this. I'm just giving an example. I need to find this guy's video in the channel because it was really dang cool. What's he doing? It's against him more. Okay, he's selling more right here. He's selling more. So each time it goes up, he's selling more. Let's just imagine that. Each time he sells, it's going more. Okay, oh man, it's going against him, going against him. He doesn't sell. He doesn't sell. And then boom, eventually the market comes down, sweeps out all these lows. Guess what just happened for him? He's averaging in every single time. He's going short here. He's going short with no stop loss. He's going short here. He's going short here. He's going short here. Because again, his risk management allows him to be able to take these trades. He's going short here, here, and then here. So guess what happens on all these trades, right? Let's say this goes back to the entry, right? This trade here gets stopped for break even, the first position. He closes it for no loss. This trade here gets closed for a small win. This trade here gets traded for a smaller win, right? Or let me give a better example. Let's say the trade didn't even come all the way back down. And if anyone's still listening to this is some like literal, like, I'm trying to open your eyes right now to just what trading is about, right? Trading is just not about, it's not about whatever you think it's about, right? This is trading. This is just how risk management and things work, right? You just pick a strategy. I'm just trying to show you because I thought this was really fascinating. I hope I can explain this well. But this is kind of a good example of, and this is an example when the market's just going against them, right? This trade here, we're just going to imagine it came back to equilibrium or like 60% retracement, and that's where he gets out because it's been going against you, right? This original position, gosh, I can't. Okay, here we go. Dang it, I messed it up again. Bear with me. Okay. Stop loss there. And then stop loss there, and then stop loss here, and then profit here. All right, so look at that. If he added one contract every single time, this contract got stopped for loss. This one got stopped for loss. This one lost. This one won a little bit. This one won. This one won. This one won big. You keep averaging your position, and your fill is somewhere here, and now you take profit. That's an example of when it goes against you. And then think about the same thing. He takes it. Maybe he didn't trade any of this, and it comes up here, and he shorts because of resistance, and then it works, and then it works, and then he takes all profits here, right? This is an example when it works. He gets a clean trade. He gets a short. He just gets a short from the top, and he gets a trade all the way down, right? This is just an example. You can flip a coin, and why does he sell here? No other reason than this is a supply zone or demand or whatever it is. Support and resistance. This is a resistance level, and then he'll buy at the bottom because this is a support level, and then he buys, and it comes down, and it comes down, and it comes down, and then it comes back up, and this is where he exits and makes money. I don't know if I explained that well. If anyone's seen this guy's channel, plug his channel name because I know that people. If someone's seen his videos, I've never seen anyone else trade like that. So if anyone knows like kind of what I'm explaining, like leave the name of his comments because it blew my mind to see that how simple trading is. Right? Trading is just building conviction in something so that you can repeat it. Doesn't matter what it is. Support, resistance. I don't like those. I don't know if they work because how much confidence I have in inverse fair value gaps and fair value gaps and liquidity and all that stuff, ICT concepts, the same conviction I have with those, I could have had with some other concept, right? In the comments, does anyone trade any other concepts besides ICT that watches these videos? Does anyone trade that has like a ton of conviction with like support, resistance, all that stuff? Like, does anyone have any other strategy they use, like indicators? Because again, trading is so simple. The only reason you need a strategy is to be able to follow something, because you have to follow something consistent. Otherwise, you can't be consistent, right? Even if you flip a coin, you have to have rules. You can't just flip a coin and flip a coin. Like, you have to flip a coin and you follow X, Y, Z, and you could still make money, right? So trading is very simple, and I don't want to downplay that and just say, trading's simple. I mean, look, I'm not trying to bash anyone. I don't even make money myself. But trading is very simple in terms of you follow your edge, you stick to your risk management, and over time you learn a little bit of discretion, you get better, you get more discipline, and you win. That's all it is. So I'm very excited to get to that point, but I've been rambling a little bit here. I'm going to pull up my... I'm going to now pull up my trade entries. I'm gotta take me a second because sometimes I press record on the trade and it ends up I'm just not even taking the trade because the candle doesn't close the right way. So it's just like a blank, not a blank video, but it's just like a 20-second video that has nothing on it. Here we go. Here's the first trade. Here is the first trade we took. We took this on the paper. I started the video late. See, we're listening to some music bobbing our head. But yeah, we took the trade off the inverse and we let it play out. This was a nice trade. I really don't mind this trade here. We let the trade play, obviously. And we took profit a little bit lower. So we took profit. It barely missed my take profit there, just a little bit lower. So I just waited and moved my stop to break even. Because again, even though it's paper, there's just no point to lose on a trade that already hit a target, a big target, which is low of day. So we just let it play out, and as you see, it comes back down in the next few seconds and fills me. I think that says about 400. It's 21 points, so about $400. So that was the one trade on paper. Very, very nice. Very happy with that trade. And then this is the trade on my actual account that I took. So we'll get into that one. I got in a little late. Look, it says we got in 5 seconds after the first, after the candle closed, so it filled me a little higher. It is what it is. I'm not too upset with that. We put in our stop loss. And in this moment, I'm like, okay, it's all right. It's barely moving up positive, but nothing too bad. We had this 1 minute that I was waiting to see close above. And then I found the 5 minute here. I was watching the 5 minute, hoping that this candle closes. It looks like it was a little bit far from closing, and it doesn't close. We come up, and then we start hitting drawdown. We're now just back to break even. We're just sitting in drawdown, and I might move my webcam to the left, even though, I don't know. It's kind of in the way, though, for these, the chart reviews, it's chill. But for these trade recordings, it's kind of annoying. But yeah, so now, as you can see, it's in the fair value gap where I entered. So I'm sitting there. Okay, if we get a close below, I'm out. It is what it is. It's a loss. I was a little bit frustrated here. I didn't really want to take a loss. It was up like $100 at one point, which, you know, it's $100, but you can't think like that. So I'm sitting there. I'm like, okay, cool. I now move my stop to that low where the red box ends. And it's like I've kind of just accepted it is what it is at this point. The trade ends up starting to do better. And then we finally break the 5 minute on this candle there. I was very happy. And we get to the break even point. We trail our stop, and we're up around 200, which is nice to see. Let's see if we fix this angle. So yeah, we were up 275 there, and then boom, we moved our stop to break even at this point. So now we're sitting there in this spot here. And I was just a little bit scared in the trade here. And then let's see when I close the trade. I close the trade around here, which, hindsight, if I waited 3 more minutes, if I just had to go to the bathroom or something, you know, something could have saved me, just stepped away. My stop was at break even. This was a risk-free trade. I have to do better here. Like I said, I'm not going to beat myself up about it. I understand my mistake. I know why I did it. And all we can do is come back and try and do better. So we closed the trade, I believe, like soon. Yeah, we closed the trade there. It is what it is. I left the video going. I went and told my dad that I took the trade. Just kind of tell him what's up. And then, yeah, and then I let the video go to show that it would have hit my take profit. There you can see the actual execution, like go through. Because I actually I don't think anyone doubts me, to be honest, because I don't know why anyone that literally claims to make zero money would doubt, like, I don't know why anyone would doubt that I actually make money or that I actually take these trades, because again, I literally sit here and tell you guys when I lose, like, why would I sit here and make up the fact that I took that trade? Like, it just doesn't make any sense. So I don't think anyone even doubts me. But yeah, the trade absolutely smacks. 2 minutes later, full take profit. It is what it is. But that was the trade, man. And that's all I have for you guys today. Oh yeah, Spain won. So we're going to see Spain play in a major final and a major tournament for the first time since I've basically been conscious. Not really. I was definitely conscious in like first and second grade, but I wasn't really keeping up with the sport professionally. So yeah, we are just ripping. So anyone that's still looking in the market, yeah, please get off the charts. Please get off the charts. But yeah, dude, Spain won. That's so sick. I think they'll win the Euros now. I hope England go, because I honestly think they're worse than Netherlands in terms of a matchup for Spain. And also Jude Bellingham, Real Madrid fan. If Jude Bellingham has to win, he has to win. So going for England, kind of. I don't really care, but it'll be a fun game. But yeah, Spain won, so that was really sick. Major final. Don't know what I'm going to do after the Euros ends, because that gives me a lot of stuff during the day to do. But this has been a great video. I don't care about... People might think I was just yapping through the whole video and just kind of like rambling on about stuff. But honestly, this video is probably one of the best videos I've made. Like, the most value in terms of just like, not value in like strategy and stuff like that, but just if you really take in the stuff I'm saying about the mindset, like I'm telling you, I might not be profitable right now, but you can't do this for as long as I have and try and make progress like I have and not learn a ton, bro. Like, so I have a lot of valuable information regardless of my personal results, right? And just the stuff I was talking about with just trading and all that stuff, like, I really feel like this video had a lot of value, not to just like, you know, stroking my ego, or like whatever. I'm not trying to be sounding whatever, like however that sounds. I'm not trying to come across like I'm some amazing, like whatever. Like I'm just happy with the video because I feel like I covered some really good, important stuff, especially if you're newer to trading. But yeah, I will see you guys tomorrow. This is another long video, bro. I apologize, but I will see you guys tomorrow. Hopefully you have a better day. CPI, be careful. And I'll see you guys. Hope you have a good one. Peace.